Hello and welcome to this overview of the iShares iBoxx Dollar High Yield Corporate Bond ETF, or HYG for short. As the name suggests, this exchange-traded fund, or ETF, tracks the performance of high-yield corporate bonds, also known as junk bonds. These are bonds that are issued by companies with a lower credit rating, meaning they are considered higher risk and therefore pay a higher yield to compensate investors for that risk. So why might someone want to invest in high-yield corporate bonds? Well, for one, these bonds can offer higher returns than traditional, investment-grade bonds. This can be particularly attractive in a low-interest rate environment, as it can provide a boost to overall portfolio income. However, it's important to note that higher returns come with higher risk. These bonds are issued by companies that may be struggling financially, and are more susceptible to default. Therefore, it's important to carefully consider the creditworthiness of the underlying bonds in this ETF, and to diversify within the fund to mitigate risk. Now let's talk about the specifics of the iShares iBoxx Dollar High Yield Corporate Bond ETF. This ETF is managed by BlackRock, one of the largest asset managers in the world. As of June 2021, the fund has over $20 billion in assets under management, and holds approximately 1,000 different bonds. The fund is benchmarked to the iBoxx Dollar Liquid High Yield Index, which represents the performance of the high-yield bond market. This index is made up of bonds that are rated below investment grade, or BB or lower, and are denominated in US dollars. One of the benefits of investing in an ETF like HYG is the diversification it offers. By holding a variety of bonds, the fund is able to spread risk across different sectors and industries. This can be particularly useful for investors who may not have the time or expertise to individually research and select high-yield bonds. In terms of fees, the iShares iBoxx Dollar High Yield Corporate Bond ETF has an expense ratio of 0.50%. This is the annual fee that the fund charges for its management and other operating expenses. It's important to note that this fee will be deducted from the overall performance of the fund, so it's important to consider when comparing it to other investment options. Now let's talk about the performance of this fund. As with any investment, past performance is not indicative of future results. However, it can be helpful to review the fund's history to get a sense of how it has performed in different market conditions. Over the past 5 years, the iShares iBoxx Dollar High Yield Corporate Bond ETF has returned an average of 8.75% per year. This outperforms the broader bond market, which has returned an average of 5.75% over the same time period. However, it's worth noting that the fund has also experienced some volatility, with returns ranging from -5.75% in 2020 to over 15% in 2017. In terms of risks, it's important to note that the high-yield corporate bond market is subject to a number of factors that can impact performance. These include changes in interest rates, economic conditions, and the creditworthiness of the underlying bonds. In addition, the fund is subject to the risks of investing in international securities, as it holds bonds issued by companies based in countries outside the US. So, who might be a good fit for the iShares iBoxx Dollar High Yield Corporate Bond ETF? This fund may be a good choice for investors who are looking for a higher yield and are comfortable with the risks of investing in junk bonds.